Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy, and today we've got something really exciting. My favorite 7 high yield weekly paying ETFs from Roundhill and yieldmax. These funds I personally hold in my portfolio for total return, meaning I focus not just on income, but also on share price appreciation. Before we dive in, a quick shout out to all of our Patreon supporters and subscribers. You guys keep this channel going. If you haven't already, don't forget to hit the subscribe button, hit the bell notification, and never miss an update. You can also check in the Patreon link below in the description, and you can join for free or help support the channel. Either way, I appreciate it. Notice to all viewers, this past performance does not guarantee future results. This information is for educational and entertainment purposes only. This is not intended to be financial information. If you need financial information, always contact a financial advisor. The strategy overview. My overall strategy is building a high yield weekly income portfolio that targets total return. That means I look for share price growth plus distributions, not just yield alone. Because we're in a bull market environment, I currently favor Roundhill ETFs over the yieldmax. Roundhill uses 120% leverage exposure. That gives us an uncapped upside potential, allowing investors to fully benefit if the underlying stocks moves higher. But keep in mind, leverage also amplifies losses. These are high risk, high volatility funds suitable only for investors who understand those risks. Well, let's start off with number 7, and that is going to be SMCY, the yieldmax MSCI Option Income Strategy ETF. Now, this fund is based on Super Microcomputer SMCY, known for their high performance server and storage solutions for data centers. yieldmax recently transitioned many of their funds, including this one, from monthly to weekly distributions. So SMCY uses option income strategies to enhance the returns of SMCI holdings. Over the past 6 months, it has shown a total return of around 51%. Though, of course, that may be vary going forward. Strong results so far, that's why it lands in number 7 position. Number 6, we're into the Roundhill family, and that is going to be the NVDW, Roundhill's NVIDIA Weekly Pay ETF. Now, NVDW gives you leverage exposure, again, 120% of NVIDIA stock performance with weekly payouts. Now, it launched in June 2025, and since inception, it has given a return roughly about 36%. NVIDIA represents the core of AI computing, making it a great example of how leverage can amplify gains in the right market. But again, leverage cuts both ways, so volatility is expected in this fund. Number 5, LFGY. Another yieldmax package. That's the yieldmax crypto industry and tech portfolio. Now, this one surprises a lot of people. LFGY combines the exposure of Microsoft, MicroStrategies, Coinbase, and several Bitcoin mining and tech firms. It's roughly a 70-30 split between crypto and tech holdings, aiming to capture the growth of digital assets with some balance from established technology companies. Since early 2025, it delivered about 19% total return. It's a high risk than traditional ETFs, but more diversified than individual crypto plays. So there's more of a moderate risk and a moderate volatility in this fund. Now, number 4, the Roundhill COIW Coinbase Weekly ETF. This is Roundhill's leveraged ETF tied to Coinbase. Again, it provides 120 exposure that pays weekly distributions with uncapped upside potential. Since launching in February of 2025, COIW has posted a 26% growth, while the traditional Coinbase exposure has fallen roughly flat. You can see on our chart, COIW is up 26.66%, while CONY is down 1.58%. This is why it earns our number 4 spot on my list. Now coming at number 3 is PLTW, tied to Penatel PLTR. This is one of my favorite AI and data analyst plays. Launched in February 2025, it delivers a 65% total return so far. Weekly income, strong capital gains. This has been a core position in my portfolio, hands down. Number 2 is WPAY from the Roundhill Universal ETF. I love this fund because it's diversified. It's not just one stock like NVDW or Coin or anyone else. It's diversified. Since launching in September of 2025, it's already up 11% total return. It's impressive for such a new fund, and I think this could become a long-term staple in the weekly income portfolios. Now coming in at number 1, my personal favorite. You have heard me talk about this one on the channel. I can't say too much about it. HOOW, the Roundhill Robinhood ETF. The fund gives that 120% leverage exposure to the Robinhood stock with weekly payouts and no upside cap. Launched in August of 2025. Again, I know it's new, but man, look at the numbers. It's up nearly 79% so far. An incredible run during this bull market. Of course, results vary, but this one's one of my best performers in 2025. Now, I have to go out there and give you honorable mentions. Now, a few of the others worth mentioning out there is CHPY, Roundhill's Chip ETF. Now, that one had a 55.89% total return. Personally, I wish I would have bought that one a long time ago. But it's definitely up there, and it's starting to really show some great numbers. Next one we look at is YMAG. This one at 57.89%. That magnificent 7. Now we go to YMAX. I'm still in favor of this one. It's doing decent, 17.12% total return. Tesla TSLW from Roundhill at 32.43. If you've watched this show many a times, I've always talked about Tesla, that they've been moving up. And of course, how could I not enjoy ULTY? Even though it's one that I just sold everything off on, a 13.65% total return so far. It's one of those funds, it's a love-hate relationship. These did not make my top 7 basically because I already have overlaps in most of these. In the AI, the tech, the crypto exposure, we have overlap. So I can't always have an overlap in a portfolio. We're very controlled that way. Now, the investment principles, the key strategies that I use for these funds. What drives my selections? First is the bull market focus. I works best on markets when they're trending upwards. The dollar cost averaging. I buy on dips to smooth out the entry prices, balance everything out. The sector focus. I'm more concentrated right now on AI, tech, and crypto growth than I am in any other segment. Now, the Roundhill versus the yieldmax. I prefer the Roundhills with their leverage awareness. That 120% leverage means both bigger gains and I know bigger losses. So, but I take that, I'm always looking to that positive side of the bigger gains. Now, the risk factors. Well, there are a lot of risk factors out there, and the high volatility is huge. The NAV erosion is especially what's relative with the yield max funds due to the way they structure their packaging. So I am always hesitant with yieldmax because these high risk, high reward ETFs, they are best suited for investors who can understand and handle that trade-off. I tell everybody straight out, always make sure you do your own research. Know your own tolerances for risk. Know what you're doing before you get into this, because these risks are there and they are high. So the final takeaway of all this, everything I share is about total returns. The combination of capital growth and income. Weekly pay ETFs can be exciting tools in the bull market, but they require careful research and risk management. Always do your own research. Know what your risk factors are. And if you're unsure, talk to a licensed financial advisor before you invest. But I give you what my portfolio is, how I choose it. I try to get a risk to reward balance approach.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug.